What's up, traders? Welcome to another live session. Today's August 26th, 2019, and what a weekend. We have G7 meetings, I believe, ending today, and on Friday, Trump dropped a bombshell, which we're looking at right here. He loves to tweet, so if you're serious about Forex trading, make sure you have Twitter just to follow this guy in particular, and maybe the U.S. trade rep, because this is what he said Friday. So we're going to start from here. For many years, China and many other countries have been taking advantage of the United States on trade, intellectual property theft, losing hundreds of dollars. And this is the interesting part. China should not have put new tariffs on $75 billion of United States product politically motivated. Starting on October 1st, the $250 billion of goods and products from China currently being taxed at 25% will be taxed at 30%. Additionally, the remaining $300 billion of goods and products from China that was being taxed from September 1st at 10% will now be taxed at 15%. Thank you for your attention on this matter. And that is what really caused a lot of the movement Friday at the end of the market and the gaps. Gold rocketed, gold tapped 1550. We saw the yen get strength again because it's acting as a safe haven. Aussie just plummeted. And that's the week so far. If we looked at a lot of the charts, there's gaps. So I don't like trading Sundays in general, but pretty significant gaps. I think Euro yen gapped 70 pips down. So here's how we're gonna trade gaps. How you trade gaps, and the best advice is don't trade them. I mean, people always think gaps always fill. Gaps always fill. Looking at Euro yen, we gapped down here to open, and lo and behold, we did fill this gap, but it does not always happen. You can even Google it. I believe someone did do a study on it. I think it's like 50-50. Sometimes when price gaps down here, it could go down for the next 2 weeks before it ever even comes back here. So it's not worth doing the gap trading strategy. All it means is something significant happened over the weekend and the markets closed lower than they opened, lower than they closed on Friday. But on Euro Yen, we were looking, before I go to the majors, we were looking for shorts. We wanted to close below this level to go short, but we just gapped down, so that's not valid. But let's look at the majors. Actually, let's look at the forecast or the fundamental schedule for the rest of the week. So today we have the G7 meetings. So we're gonna get I believe right now Macron and Trump are speaking about the Iran deal. So we should see some movement in the markets as we do our live session. If you don't know, U.S. does not want Iran to strike another nuclear deal, and so hopefully if they talk it out, they can reach that. And obviously if that happens, Euro and the USD will kind of get a jump because they kind of talk things out. Because right now in the middle it's Euro, and on both sides it's America and Iran. So hopefully they do reach a deal on that. It looks like they will. But the rest of the day, we had durable goods. Core durable goods came out worse than expected. Moving on, Tuesday, consumer confidence. I believe Thursday we have GDP. Crude oil is going to be major, obviously, for trading crude oil. I believe there was a setup. NSD, so we have business confidence and private capital expenditure. So the Aussie will be a pair to trade. I'll speak about that. So Thursday we have prelim GDP. It's going to be major, especially for USD strength. We want this higher, obviously, especially since they cut rates and they're on the brink of a recession. A lot of economists believe that. I believe someone from Goldman Sachs was on the air on Friday on CNN talking about the U.S. economy is on the brink of recession. It's just, we're teetering. So, this GDP will be telling. Hopefully it is better than forecasted. If not, we'll be looking at pound buys and euro buys, USD yen shorts. But most of the week is pretty quiet. It's just the dollar news. Friday we have some CAD GDP, and that's about it. That's about it for the week in general. So nothing too news intensive like last week. Last week we took 6 trades, all winners. I don't know if we've had that where we had all winners, but solid setups. We took advantage of the pound fundamentally being weak, and we just rode with it. Now this week we're gonna take a look at a few pairs on the majors, get a bias. That's what Monday is for. So let's look at Euro. Euro has rallied, obviously, Friday, especially with the tariff news. And so we had, initially we did have a mini break. Actually, we didn't even get that break. So we wicked out of the consolidation box. We didn't get that break and closure. We had a nice spike on Friday with this candle, and since then we've ran into previous support at 1.11450. And we do have an intraday setup here, which I love trading these setups in general. Just a range. If we just extend this over, we could have another range fill. Last week we did talk about this support within this resistance within the range, this level right here, 1.11100. If we can get a close below, that'd be awesome to short to right around 1.10700. 30 pip take profit and maybe a 15 pip stop loss would be good for intraday. But the price action you can see is pretty ugly because we had major news going both ways. I believe this is since the Iran deal speech that's going on right now. And this was obviously the tariffs that Trump placed on China. So, and I believe it was also because of the weaker core durable goods. So, conflicting news. So price action on most of the pairs will be ugly. But if you zoom out and you can see, even on you can go to the larger time frames, but even on the 4 hourly, we're still following the bearish price structure. I mean, if we look, we've had pretty sharp downfalls here, some minor retraces, consolidation, and a major downfall, and then some aggressive pullbacks off psych levels like 1.10,000. So an aggressive pullback, but it's all within the realms of a short. The only thing is this previous low hasn't encompassed this previous low, so it could be a trend shift. However, this previous high did not enclose any of these, so we may euro they're also doing pretty bad economically. Geopolitical stuff is affecting euro as well, and overall the trade war it's weighing on everyone. Germany and French markets are struggling because of the trade war. So we could see euro continue down. The price structure is still bearish until we break the significant descending trend line that we drew from the daily. I wouldn't be looking to buy euro for any swing opportunities. Just looking at this, you can see the overall price structure. We could very well just close down and make further lows, and for that to happen, we would have to close outside of this consolidation box somewhere below. But we can definitely nab the intraday opportunity. It is only Monday, and we still have, let me extend this over, we still have the G7 meetings for the rest of the day. So no point of rushing and forcing the issue. And you guys, I hope you guys are on the portal. The chat is down. You can also watch on YouTube if you want to, watch there. But for the time being, the chat will be down. We'll just be going through majors and be looking at different pairs other than the majors for setups. Hopefully those are pairs that you guys are wondering about as well. But euro intraday opportunity, the overall price structure is down. I'm not too convinced about longs until we get a break outside this trend line and maybe a break above 1.11900. So if we can get a break above, we can have another push to these highs right here, 1.1350. So moving on, pound. Pound looks different in price structure just because if you look, we're going to keep the time frame the same as euro. We had significant fallouts, minor retraces, but as of late on the smaller time frame, we have been making higher highs and higher lows. And the thing is, pound's in a weird spot politically because they just got a new PM. So it's not like Theresa May where we kind of knew where she was going with. Who knows what Boris Johnson has in store for the pound in terms of monetary policy, right? Once Brexit is done with, and either the euro allows it to happen and Brexit can be its own country, or once that's handled, they can focus on monetary policy. But until then, GDP and CPI are going to be the main factors of the pound economy. We had obviously great the week before we had great numbers for them, so that's why we had the initial push. And over here we had the short, I believe. I don't know what came up for the pound, but it wasn't as good as expected, so we got the short. Since then, we have rallied, and this is majorly due to the tariff announcement. If you just count the days, you can see Fridays right here. So right now we did have a sharp push. We're pulling back on the 4-hourly. There is a potential setup. Like I said, we do like to trade with the trend. And what happened was when we did make that push, and I did say we could look for buys on this area. I believe this happened at the end of Friday, so I don't really like trading Fridays, but you could cut some of this long. Since then, we pulled back to this recent high right here, 1.22 thousand. So that's key cycle level I was talking about. That if pound does break, we can go for longs. We're at that key level right here. It's been resistance previously for the pound. Similar to Euro USD, if you can get a close below, you could have shorts. If not, I am looking for longs. I'm not against longing. It's just pound is one of those pairs that you never really want to be long unless you're sure, and especially if the fundamentals are uncertain, it's a gamble. I'd be more inclined to long Euro or maybe even NSD USD before I long the pound. But if the setup's there, we're gonna take it. If we can get a close above 1.22500, something bullish. Nothing like these candles with wicks, something bullish. We could make a push to 1.23700, which was a level that I did say that if we do break 1.22000, we could make a push to. And if you look at price structure, higher highs and higher lows, so it is consistent with an uptrend, and it's different from the price action that was here. The price action here, the bullish runs and the retraces were all mumbled together. It was all jammed packed. But here we have spacing between the bull runs and the retraces, especially since we started out of the support. So once we came to the support zone, we've noticed our bullish runs have started to be more intensive, more longer, and our bearish retraces have gotten smaller. Over here you saw similar pushes and retraces and a lot of jam-packed consolidation. So that's what is different about this recent price action compared to here, and so that's why I am looking to maybe possibly buy. And right now we are printing a hammer spinning top off 1.22 thousand. Let's get a nice bullish break above 1.22500, and we can log. And going to specifics, entry somewhere around right around here. It is a bit daunting to enter because we did create some resistance here, but it's going to be pretty good in terms of risk to reward to enter anyways. 2.1. So entering somewhere here, our first take profit would probably be 1.22900, right above this recent wick, just to make sure that if we do run into resistance, we can lock some profits and not get in trouble. But the final take profit, 1.23730, is where we're looking for pound longs. On the flip side, if we do get that, Control Z, cool. So on the flip side, if we do close below, this support right here, 1.22 thousand, I would be looking for shorts. But the best criteria for shorts, in my opinion, is a close below 1.21700. This key level right here, major resistance. If we get back here from all the way here, then all that is telling me is this recent move was all impulse based off news. Investors trading to safe havens. That's about it. It's not all the pound is shifting. The sentiment on the pound is different. The dollar is weak, and here we go. So that's what I see for pound. I am actually going to pull up the dollar index so you can kind of get an idea technically where things are headed for the dollar. So the dollar has gapped down quite some bit. Let's go to the weekly. So on the weekly, we haven't looked at dollar index in quite some time, but for I believe when we started the last sessions, we were somewhere here in April and May, right at 98.25. Strong resistance for the dollar. It's been capped since April at this level, and we have been respecting this trend line, this ascending trend line right here. We did get that previous push, but this support at 95.82 came in handy, and we bounced back up. Now, technically, what's happening is the dollar index is kind of getting squeezed at this resistance, right at 98.25. You see how it's kind of making. Let me get the arrow out. So you can kind of see it's kind of getting funneled into this resistance, and we saw this with USD CAD last week. Either the resistance will give, and dollar index can pop up and go to push these highs and to this weekly trend line, or the resistance stays put and we have a fallout. Based on recent fundamentals, the latter is more likely. A lot of indecision, but if you look, we might just make a one final push to this resistance 98.25 before the dollar index just gives and we drop back down to 95.82. So this range right here is where we might go. But that's the thing about when you get funneled into resistance, is two things can happen, and it's usually, obviously it can go up or down, but more importantly the move itself, the aggressiveness in nature. We saw with USD CAD when we shorted it. It had the same scenario, was pressed up against the resistance, and once we got that initial sign of rejection, when we entered short, it went to the range, to the bottom of the range within like 2 hours. So that's what's going to happen. It's going to be an aggressive push. I think GDP Thursday might be the catalyst for the move because we are on the weekly time frame. The daily just shows further consolidation in this area. Previous breaks outside the trend line, gap closed back in. So based on the candle we're printing right now, which is some sort of a bullish candle in general, might be a hammer depending on the way it closes. We will make a push to 98.25 right here, and from there we might go down. We'll see. Even on a smaller time frame, you could draw this. So we're just kind of getting wedged. We're just kind of getting wedged right now. So we'll see what happens. But if we can get the, all these closes outside the trend line are all gaps. But if we can get a nice close and maybe a retest, we will have some technical weakness for the dollar. But I think Thursday will be a catalyst. Moving to the Aussie. So the shorts finally played out, and looks like Aussie is rocketing. So when we shorted Aussie, I think I got everyone out at negative 30 pips, or we hit stop loss, but I stayed put because I knew it was gonna go to 0.66, right around here, 0.6700, and over the weekend it finally tapped that zone, so I got out. But once you get experienced in trading, you can make your own calls and your own shots, and stay in a trade even when your supposed stop loss has been hit. You can always extend it because the move was going to happen. So all it took was a final touch at this resistance before we tapped the final take profit to the pip, and since then we've rallied. And while I was preparing for the live session, I was looking at 0.6800 as a target for Aussie, and we're well on the way there. I believe something happened in G7. They're probably there's a speech going on right now with Trump and Macron, so I think Aussie's probably going to go there in the next hour or two. But 0.6800, recent resistance for Aussie. I am looking at a long Aussie at some point, but I would need an actual break of 0.68300. It's capped us, and even this resistance has capped us. If we can break this resistance and hammer this one, then there's definitely a trend shift, because the overall fallout of Aussie from this trend line touch has been pretty aggressive. So we may be due for a retrace to this next touch before we go lower, because Aussie is also cutting rates as well. So moving to USD yen, and I think we'll do gold and then a couple of minors and send this pair off. Send this live session off. USD yen, last week I took a personal short. It hit my take profit, but actually went further. No big deal. Right now this line right here is not a support and resistance line. It's actually a trend line from the weekly time frame. If you've been here from the start, you should probably know about it. But price has come back and it's currently retesting it. I would look for shorts. Something like this wouldn't be too shabby for intraday. After if this candle closes the way it is, it's 4 hourly. It'd be a good confluence to go short. Have stops right above the trend line itself, right above this wick. Take profit right at this previous support, 104.736. And if you guys remember, I think 2 weeks ago or a week ago, I did say USD yen will hit 104.736. I believe that's even the title of the video, and we finally did it. We did, at this point I thought we were going to, but we had a sharp pullback. But we finally did that. So we finally tapped that key level, and now it's looking like we could have another attempt to go there or even lower. We'll just see how this candle closes. So I am looking to maybe short USD yen later today. I'll be on the lookout for that signal. Gold has rocketed, tap 1550. Yeah, so gold spike 1550, and it's right now just in our support, our resistance region right here, right in the 1530s area. Last week I was looking for shorts, but I was not convinced. Two things. One, we printed a hammer at the resistance. If we printed a bullish hammer at resistance, you do not short that, obviously. We wanted something like this or something like this, a bearish engulfing. We didn't get that, but this week, if gold can come down below the 1530s or even close, and if you want a safe bet, below 1519, gold will be more than inclined to go back down here. Other than that, based on the USD weakness, we could be looking for longs, just because we have a lot of small accounts. Gold, and it's volatile right now, especially with the trade war. That we have a lot of gold moves like 230 pips. Actually, this is more since Friday, and so this could be devastating to people with small accounts. So I don't really like to call gold setups unless they're intraday. But this is an intraday trade right here. It closed below 1519. You can pay a visit to 1490 right there. Alternatively, for longs, let's go to the hourly. I believe on the hourly we'll see some consolidation, and if we can get a break of that consolidation level, we could have longs there as well. So on the hourly, we've tried to close. Excuse me. So we've tried to close outside the support, this resistance region. When we came up to retest it, we haven't really got the rejection past these levels. So for longs, I'd be cautious just because recent price action has kind of shifted. If you look, it's making higher highs and higher lows. Could be actually a nice intraday short. Based on that level I was talking about, this is not a bad setup. Not a bad setup at all. But I want to take it just because G7's today. We have a speech going on right now, but this is not a bad setup. This is not a bad setup at all. Not even just from a risk to reward perspective, but even technically. Aggressive push up. It's due for a retrace. We have that retrace. We have closed, and right as we speak, it's dropping. We're closing within a resistance region, which we've talked about. The best entry is obviously closes below this hourly support. So I might call this and tell people to go smaller than usual, even if you have a big account. But this could be a nice setup for the week. Let me fix this. Not too bad at all. 2.13. So we have created support right at 1525. Okay, a lot of support, a lot of wicks here. Close below that level. It's not a bad setup to go short. It's not a bad setup, and your stops is right outside this trend line we just drew of this resistance region. So we have two confluences there. Not a bad setup to trade gold. If you enter this trade and it comes to our 1490 target, you wouldn't have to trade any other trade for the week. This one trade could make our 150 to 300 pips that we need per week. So watch out for this. It's actually a nice setup. And even though we have G7 today, hopefully tomorrow we can enter and take advantage before Thursday. But not a bad setup. So this is just watch out for something like this. Close below 15.25. Make sure it's an actual close, not a wick. And ideally, the close should be a bearish candle, like something like this. If it closes like